Hi, everyone. I'm Kathy Schmitz, Executive Director of the Vilas County Economic Development Corporation. Thank you for joining us today for our panel of experts, where we answer your questions about business taxes, grants, and loans, all to help start, support, or grow your business. So we're pleased to welcome our panel of experts. First, John Chamberlain, a CPA and co-owner of Chamberlain Ott CPAs in Lake Geneva and the board treasurer for the VCEDC. And second, Dustin Peterson, who is the business banking relationship manager with Associated Bank. And as always, we extend our sincere thanks to Associated Bank for sponsoring today's program and all of our lunch and learns. And thirdly, Jeff Larson, who is the business developer at the Entrepreneur Fund. And we're thankful to each of you for sharing your expertise with us today. Each panelist will take a few minutes to share some background on their business and how they can help support you. And new today, we're adding a very brief program survey that we'll share with you a couple times during the program. So please take a moment to complete that so we can continue to enhance our programming. And so what questions do you have for our experts? Please put them in the chat and we'll answer them right after their presentations. So John, let's start with you first.
All right. Well, thank you, Kathy, and thank you for having me back again. We did this just not quite a year ago. The topic was more on individual taxes. This year we'll be doing something on the business tax side of things. But just to give you some background on me, Kathy kind of touched on some of my background. I do have an accounting firm in Lake Geneva, Wisconsin, Chamberlain Ott, provide tax consultation preparation for businesses, individuals, nonprofits, homeowners associations, and then we also do financial audits for some of those same industries along with school districts and so forth. One thing I'd like to refresh, and that is in regards to the whole FinCEN beneficial ownership interest reporting that originally was due at the end of 2024, but that has since been put on under an injunction, so it's on a holding pattern, but certainly something where you want to consider making sure that you have all your information together, because the last time they lifted the injunction, you had like 2 weeks to get things in order and get filed. So that, again, like I say, is in a holding pattern at this point. Getting into some of the tax topics, one thing that I run into quite a bit is people, starting a business and they've got their first question is, well, should I be a sole proprietorship or should I be an LLC? And really that decision is more of a legal decision than a tax decision, because your tax is going to be the same under either format. It becomes more of a question then is, okay, I have this LLC, should I make it have it taxed as an S corporation? And that's where you can get some savings on your Social Security and Medicare tax. With the LLC tax as a sole proprietorship, you're paying your Social Security and Medicare tax on 100% of those profits. Whereas if we convert to the S corporation, what you can do is take some of your profits out as wage, take some of it out as shareholder distributions, and then that way you're only paying that Social Security and Medicare tax on just a portion of what your profits are. And as an example, if you've got a LLC that has 75,000 of net income, you can save up to, almost $5,000 by becoming an S corporation and drawing half of that 75,000 out as wage and only paying that Social Security and Medicare tax then on that half. Certainly, as your income goes down, in proportion to what you're taking, as your income goes down in general, obviously the savings are going to be less. Also, depending upon the mix between the salary and the distributions will also decrease what the benefit is. And kind of just as a rough guideline, we don't really start considering the conversion to an S corporation unless you have about 50,000 of net profits. Couple other things to consider, certainly with selecting the S corporation. Now you're going to have another tax return to do. Like I say, you're going to be on payroll. So now you're doing the biweekly, monthly payroll reports, payroll tax deposits, W-2s at the end of the year. A couple things to take into consideration there. And then also, obviously, the less you pay into Social Security, potentially the less you're going to get, when you start drawing in your Social Security. And similarly, if you're don't have as much salary, obviously, if you're looking at contributing to a retirement plan, you've got less income there than to use for that retirement contribution. A lot of the obvious question I get then, well, why don't I just take it all out of shareholder distributions and not pay any tax? Well, the IRS has thought about that, and when the S corp law first came out, a lot of people were doing that, and so they weren't paying any of their payroll tax, didn't have to pay any of their payroll taxes. And so the IRS has come out with a rough guideline of, if up to, generally speaking, at least a half to 2/3 of any income that you're drawing out of business then should be coming out as salary so they can get their payroll taxes paid in. Other area that I get a lot of questions on is, okay, I want to buy a vehicle for my business. Should I title it in the name of the business or title it, keep it in my personal name? And really your deduction isn't going to change regardless of whether you have it, regardless of how you have it titled. I mean, and your options then as far as taking expenses are, keeping track of your mileage and just using the standard mileage rate, which the IRS has put at 70 cents a mile. And that covers your insurance, repairs, oil changes, any of your depreciation and so forth. And that 70 cents a mile then goes on basically forever. It doesn't matter how many miles you put in any particular year. Doesn't matter how many miles you put on over the life of the vehicle. If you run the vehicle for 100,000 miles, you're getting the 70 cents a mile on all of those miles. The other option would be to keep track of your actual expenses. That, you would still have to keep keep track of your mileage so you can allocate between the business and personal portion of your auto expense. But then you're also looking at keeping track of receipts for your oil changes and your repairs and your insurance and so forth. So probably a little more effort involved under that scenario. But then you would also keep track of your depreciation separately. You have a separate deduction for that. But the issue there is once you run out of depreciation on the vehicle, you're in essence losing that deduction. That's pretty much on those topics. I'll pass it on.
Okay, John, thank you very much. Dustin, you're up next.
All right. Thanks, Kathy, and want to thank the VCEDC for having Associated Bank on to talk. For me, as far as presentation, lending comes down to the business, so it's all pretty unique. I don't have a ton to cover as far as what we offer. My role specifically at Associated Bank is a business relationship manager. So I'm the person you call when you have things that you want to get taken care of through your business, and we try and find solutions. And the nice thing through Associated Bank, we have different tiers of lending available. So we have middle market, which is your higher businesses, revenues, 5 million and above. And then we consider this business banking market, which is mine, which is up to 5 million in revenue. But I help all of our managers throughout the northern area of Wisconsin, from Stevens Point north all the way up to Ashland, as far as conversations and really just talking with businesses and trying to understand what they want to accomplish and how they want to accomplish it. A lot of times people want to borrow money, and it's not because they necessarily need to borrow, but because they may not understand exactly what they're trying to accomplish, more so than looking to get the money. So we always are here and available and willing to talk. And I always suggest reaching out to your local branches and finding a connection. I'm certainly able to help and field phone calls and do things, but I know community matters, and wanting to be involved with your local bankers is really important. So most businesses will have a banker, and they have a bank, And it's really making that connection and building the relationships so that your bankers understand what you're trying to accomplish. I can say from personal experience, the hardest thing is when we find out that our business customers need money and are looking for solutions and wanting to buy a piece of equipment after they've already made lots of other decisions that hamper the ability to acquire the cash. So I'm going to pick on John a little bit, right? So a lot of time our business customers reach out to their accountants and they say, hey, I don't want to pay any taxes. And they look to their accountant to say, okay, so let's make it look like you didn't make any money this year because then we don't have to pay taxes on it. And then what happens is 6 months later, you walk into a bank and you say, hey, I need to buy this new XYZ machine or equipment or, make this purchase, or I want to buy a new building. And the first thing the bank does is says, great, let's take a look at your finances and find out how much money you make and what your debt capacity is for your business. And then you hand us our tax returns and it says you made negative $3,000 last year. And it makes it really hard for the bank to understand how we can lend to that business and how we can actually build a feasible debt structure for your business. So sometimes some pre-planning, because I totally agree. I want to pay Uncle Sam as little as possible, but having a strategy and a plan and understanding how you want to accomplish it is sometimes really important as well, so that we can get all of the people who are involved in that process on the same page, right? And we know what we have to show and how we have to show it. So that's my key point. I mean, nowadays there's so much stuff out there for small businesses and businesses in general to look at. I know we have Jeff on, with unique funds availabilities. The SBA is a great opportunity. I know here at Associated Bank, we're a preferred SBA lender, which really helps because what that allows for us to do is basically our underwriting standards are okay with the SBA. So there's not an additional level of scrutiny that goes in from the SBA separately. And our processes are sufficient to take care of that for the customers that want to apply. And that's through the 7A program. And then there's also a 504 program, which is handled through certified development companies that the SBA works through. And in those type of deals, which are typically larger real estate deals, bigger transactions, the bank partners with that other company to provide the financing, and they kind of split some of the responsibility there. We also have a really quick process here at Associated Bank. This would be kind of my one tool in our tool belt. Is we have a, similar to like a mortgage lending, an online application tool that's really easy, and it's more based on the cash flow of the business and what's coming into your deposit account, where we look at bank statements over a 6-month period and determine what the cash leverage of the business is, and are able to do quick turnaround lending up to $100,000. And that's mainly based on credit and just the cash flow of the business. And then we have, additional opportunities and lending programs where we do full financial outlooks, commercial lending, real estate, you name it, we have it. So like I said, for me on here, it's probably more important to just field questions and anything specific that somebody has that I can point in the right direction or make a connection or follow up to. The other thing that I would say, even though business bankers, a lot of us are focused on lending, also ask about just general everyday treasury management products, cash products, merchant services, credit cards. Fraud is such a huge topic nowadays with, your checks and ACH transactions, electronic fund transfers, all of that stuff. While your banker or lender might not be the primary person who's going to be able to answer all those questions, I guarantee they have somebody they can connect with and loop you into to help with those solutions as well, which are more and more prevalent. The amount of things I see happening with check fraud and issues that small businesses run into, and they think it's not going to happen to them because they're just a small business in a little community, but it just makes it easier because the rules in banking aren't as protective to business customers as they are to general consumers. So it's really important to stay on top of it. But a little sidebar there. But yeah, so lending questions, fire away, and I will be happy to chime in with whatever I can.
Great, Dustin, thank you so much. And just to clarify, as far as we know, we do not have anyone from the IRS on this Zoom meeting today. So wanted to say that. It's been mentioned a few times now, so I think we're all safe. Okay, next up, Jeff.
Hello, I'm Jeff Larson. I am with a company called Entrepreneur Fund. Thank you, Kathy, and thank you, VCEDC, for having me on the panel. Entrepreneur Fund is a community development financial institution, what we call a CDFI. And a CDFI is a mission-based, typically a nonprofit private financial institution, and we're 100% dedicated to delivering responsible and affordable lending and advising services to help the underserved communities across northeastern Minnesota and northern Wisconsin. So our business started in 1989 in northeastern Minnesota, and we expanded into Wisconsin in 2023. That expansion was in 5 northwestern counties of the state. And then last year, 2024, we expanded into Oneida, Vilas, Forest, Florence, and Marinette. And so we have a service area that we work in, and basically that service area is north of Highway 8 across the state. We are one of the few CDFIs in the country that's actually a licensed SBA lender. As Dustin mentioned, almost all banks are really licensed SBA lenders. And then there's a few of us CDFIs that are also licensed. So we do make SBA loans. We do the 7A loans, and we also work with the 504 program, as Dustin mentioned before. And we also have a different product, which is called a micro loan that we work with. And so really what our role is in the small business lending world is we really occupy that space that traditional banks like Associated Bank and Dustin, those companies that don't quite meet the underwriting guidelines that they have. So like Dustin went through, his example where the business was managed such that they're not showing any profit, and based on their general underwriting guidelines, your business doesn't qualify for a loan through a traditional bank. That's really the space that we're in. So we do underwriting similar to the bank. We look at the same information, but our underwriting criteria is not as stringent. And so we look at many non-financial things. How long have you been in business, and what kind of business you're in? So generally speaking, within that area, what we're trying to do is help finance businesses and get them to the point where they do qualify for traditional bank financing. And then we can hand you off to Dustin and you can finance your business through the bank. We do a lot of startup businesses. We finance a lot of startup loans, and we do things that banks typically don't like to do: service businesses, restaurants, bars, campgrounds, and things like that. Lending is part of what we do, and the other part of what we do is business advising. And so we'll spend one-on-one time with you, and we'll really work to build a customized roadmap of where you want to get with your business, and whether that is spending time on cash flow management or budgeting, or whether that's marketing or operations or website development. We'll spend time, and we have resources that we can help you get to your goals. That's really what Entrepreneur Fund is. Like I say, we're new to the area. In 2024, we've had a very excellent acceptance in the small business community in this area. Yeah, that's about it for us, and I'll answer any questions that I can.
Great, Jeff, thank you so much. And I can tell you that from our experience at the VCEDC, Jeff Larson at the Entrepreneur Fund, Associated Bank, we have representatives from some of the other banks on our Zoom today: Incredible Bank, People's Bank, all of you have been just tremendous to help our entrepreneurs. And so as Jeff said, we have colleagues like the Entrepreneur Fund and others in the community and regionally through the WEDC, the SBA, UW Stevens Point, Nicolay College, other resources out there that we're delighted to introduce you to if you have any questions or need support for your business in any way. That's what we're here for, so please do reach out. With that, what I'd like to do now is just open it up to any questions that you have. Please put them in the chat, whether it's for Dustin at Associated Bank, Jeff at the eFund, or John Chamberlain from a tax perspective. Please let us know, and we're happy to take those one at a time. I guess the first question that I would throw out to you is, one of the questions that we get often a lot is around finance to either start or grow a business. And so we get a lot of, I want a grant, I don't want a loan. Are you aware of any grants out there, or if people are looking for grants, where would they look to?
So I'll chime in with that. There are some grants available. They tend to be particular to an industry. At times, our company, we offer grants. So we had a grant program last year where we provided grants when we paired that with a loan through our business. That ended at the end of the year. And so right now we don't have any grant programs. There are some available, and if you're interested in that, I can point you to a couple sources. One of the other good sources that is generally familiar with grants that are available is the Small Business Development Centers, and those are located in our area. Our SBDC is located in Stevens Point. I have contact information. I think, Kathy, you do too. If there are grants available, we can help you find them. There's usually the grant amounts are small in nature, $5,000 or $10,000, and they usually tend to be kind of related to a particular industry, but occasionally they crop up and we can help you find them.
Yeah, absolutely. Jeff, thank you for that. We do have a question from Shirley about online businesses, how to make sales tax payments to all the United States. I'm not sure I understand that, but John, maybe you do.
I understand that one. And generally speaking, there are limitations from state to state as to when you are required to file. Some states have it based upon the number of transactions, some have it based upon the amount of sales that you're making into that state. And so it may be, up to 200 transactions in a year's time, or 200,000, 500,000 of sales. And so if you've got one sale for 500,000, yeah, you don't meet the 200 transaction threshold, but you do meet the dollar threshold. So it's one thing to watch out for, and it's a matter of then going state by state and seeing what each of the states, what their limitations are before you do have to file. Certainly, if you just sell one item for, $50 into a state, you're probably not going to have any filing requirements for that state.
And I think that, I think you addressed that. The question is often, do I pay the sales tax from the state I live in or the state that I'm purchasing in? And I think it's the state you're purchasing in, correct?
If you're buying if you're buying something online, then yes, you would be subject to based upon the state that you live in. What my examples were earlier were in regards to if you've got an online retailer or something that are selling into various states, that's where those dollar and transaction limitations would come in.
Right.
More and more of your vendors now are getting in the habit of charging you for that sales tax. So there isn't the issue then of having to remit the use tax if you haven't paid the local sales tax. But there is a spot on your tax form for the state of Wisconsin to put that in there if you do have sales that you purchased out of state that you didn't pay sales tax on.
Okay, thank you. That's helpful. Shirley had a follow-up Is WooCommerce better or selling through Facebook? What's the limit in Wisconsin? John?
I'm not specifically sure what exactly the question is.
Can I speak to you directly about this then? For online retailers, if you have a product that you're trying to sell, you've got a website here in the state of Wisconsin, but somebody from, say, Illinois or Montana orders your product and they have a different rate of sales tax. So WooCommerce would figure out that sales tax amount, and then the customer pays that, comes to me as the online retailer. But how do who do I remit that to? The state of Wisconsin or Montana or Arizona or whatever? How do those 50 cents or $3.29, how does that money get funneled from Wisconsin, from me as a retailer, to the individual state where the customer lives? That's my question.
If you are subject to sales tax in any particular state, you would need to file and pay with that particular state into which you're making the sales.
So how do we do that though?
There would be forms available from those states that you could fill out then and make their payments. Probably best to look under the Department of Revenue for any of the applicable states, and that should be able to give you some guidelines on what their filing requirements are and procedures. A lot of them will do it online. More and more are going away from paper filing and are encouraging the online filing and payment of those sales taxes.
Does eBay, I know when sales tax for each of the individual states was implemented, eBay put up a big stink about that because they have sellers from around the country selling to buyers around the country. So, that's to me, it stifles online retailing.
Yeah, I mean, the purpose of it all was to kind of equalize the playing field, where if I'm sitting here in Wisconsin and making all sorts of sales into Montana, I'm not paying sales tax, where a brick and mortar retailer in Montana is having to pay those sales tax. And so that was part of the reason for making the change. That's basically the gist of it.
Yeah, I know. I tried researching this, and I think I found, like here in the state of Wisconsin, the limitation I think is $200,000. If you're selling less than $200,000, then you do not have to remit those taxes to the other states. But I'm fuzzy on that.
Yeah, well, it's kind of a gray area in that, like I say, it does vary from state to state. So if there are specific states that you are selling to, I would look into what the requirements are for those particular states.
Okay. All right. Thank you very much.
Great. Shirley, thank you very much. And I think, overall, Shirley brings up a good point that as we encourage more people to do e-commerce, kind of offset some of those times when that foot traffic might not be there. And we all experienced that last winter, right? That e-commerce versus that brick and mortar tax sales and all that. I think she brings up a really good point with that. I want to switch over back to Dustin and to Jeff. When an entrepreneur comes to you or a business owner and they want to start or grow a business, what are some of the documents that you need to have from them before you can move forward with an application? Because we often get that question as well. What do I need to have prepared before I go and talk to you for a loan?
I can start with this one because a lot of them come to the bank first and right, that's the logical starting point. When you come in, obviously personal finances are huge. If you're looking to start an endeavor, and I'm talking completely green, right? Like starting from scratch and wanting to get that loan or start up or buy a building, we have to make sure personal finances are in order and take a look at that. What is the debt and the liabilities personally are you responsible for? What is the income? Knowing, are you going to keep working your job while you start this business? Are you not going to keep doing it? And then number two would be just a plan, an actual business plan of what you're going to do, right? So I'm going to give an example because in my world, these tend to resonate easier, right? If you've been working in a landscaping company for multiple years and you have decided that I want to go out on my own and I want to start my own landscaping company, but I need a couple of loans. I need to get a truck, a trailer, a lawnmower, and a couple pieces of equipment. And I want to start this fresh. So first, you come in and you talk to us, we want to know, well, what is your plan? How are you going to actually be profitable in this business, right? How are you going to drive new customers? How much are they going to pay? What is your outlook for what you're going to charge? Do you have any contracts or things already set up? I joke because the one I got was, well, I just know I can do this better than the person that runs my company. And so I'm going to steal all their customers. And that's not a true viable business plan. We need to understand what you're actually going to do to get those customers and call, or you're going to offer special rates, things like that. That's usually the first thing that's actually missed. They have a great idea. They have something they want to do, but haven't formulated it into a true business plan. And then what I find with that is because we don't know what we don't know. And a lot of people don't have experience putting together a business plan. So Jeff already gave away one resource that I would say that is a highly recommended thing that I sent out is the SBDC. The Small Business Development Center for the state is great. And they have people who, a lot of their people have either ran a business or gone to school directly for business finance. And they're a great resource and they spend a lot of time. Otherwise, your local organizations that offer those services that will sit with you, as Jeff said, and we'll walk through, how do we formulate this business plan? How are we going to really make money? That's the thing I always want to help entrepreneurs understand is there's a difference between owning a business and trying to make money at a hobby. And how I explain that is, you can make a widget or a knickknack and you can sell it and you can make a profit and you can make some change. And the fancy word nowadays is a side hustle, right? And you can do all of these things and you can make it good, but there comes a point then where you determine, hey, I want to make this my living. I want to do this as a job. There's some additional steps that go into making sure that it's truly a viable business. And my hardest part as a lender, I think in the bank specifically, where the policies are a little bit more conservative as we lend to, as Jeff alluded to, is when I have to explain that the way you have your business plan laid out will not make you enough money to sustain the lifestyle that you have. And you would have to grow to a certain point, or you have to find additional income until you get to the point where you're actually making the business profitable. So many people are really good at a skill or a service or have an amazing idea, but haven't connected the dots on how to actually turn that into what I'd say is a viable business, where you have to start taking into account all of your expenditures, the rent, or selling online, paying the taxes. Am I going to need employees? A big one, if anyone watches Shark Tank, is when they say a company grows too fast, right? Well, you have these great sales numbers, you put it out there, but you can't hire enough staff or buy enough equipment because you don't have the cash flow yet to produce at the levels you need to. So you actually can't deliver to the promise you made to your customers. And there's just so much of that stuff that we forget to think about because it's more fun to think about the amazing, making a lot of money and building a great business. Sorry, that's a little bit of a tangent off of what you asked there, Kathy, but the SBDC business plan, personal financial statements, if you're buying a business, the financial statements for that business and where they're at.
And Dustin, thank you. And I appreciate your point about how to develop a business plan. Andrea is our contact with the SBDC and for our region up here. And we'll be doing a program with her, a lunch and learn coming up in the next few months. So we hope everyone can attend that as well. Jeff, any follow up to what Dustin shared?
Sure. So I would echo the SBDC as far as developing a business plan, getting that put together, and projections. They will help you with that. And everything that they do is no cost to the business. So all of their services are free of charge. As I mentioned, we look at the same information that a bank does. So we're going to look at the last couple of years of personal taxes. We're going to have you fill out a personal financial statement. We're going to want to look at that business plan and projections if you're a startup business. If you're an existing business, we will likely want you to put projections together, and you can work either with us or with the SBDC to do that. You don't necessarily need a business plan, although we do recommend that you generally always have a business plan. That's your roadmap as to what where you want your business to get there and how you're going to get there. So those would be the comments I would add.
Great, Jeff, thank you. John, back to you. While we're waiting for any more questions to come in on the chat, John, are there any other significant changes coming up to this year for the business owners that we have on our Zoom today that they
Yeah, I
need to
guess
be aware of?
potentially from both the individual and the business standpoint, the Trump-Ryan tax law changes that were, passed in 2017 are set to expire at the end of this year. What's going to happen with those is hard to say at this point, but certainly there will be some changes coming up at the end of the year, either with reverting back to what was law prior 2017, or probably more likely, additional changes to those laws that are currently in place.
Great, thank you. And getting back to the loan piece of it and the SBA, we have already been getting some questions about, do we anticipate anything coming out about a EIDL loan, which is the economic injury disaster loan that happened this winter? Well, we're incrementally getting some snow up here. It's not quite enough yet, but they have opened up the trails, which is a good sign. And hopefully that foot traffic will maintain there as well. I have been in contact with some of our congressional leaders, and they are in fact looking at this already to preempt a possible opportunity for the SBA to provide any type of a loan for this. There's nothing concrete yet, but they are indeed looking at it. So stay tuned for any information on that. But hopefully we have time left and we'll still get some more snow up here. So with that, any other questions that any of you have? I hope we've covered everything. Is there anything that we're missing that you'd like to know about? Kim Starkey has a question. We would like to meet and review with someone. We have made it through the summer with our resort and are limping through this winter. So we'd be interested in talking with someone. You also mentioned there was a place where you could get online funding through the internet, which is like a GoFundMe. Can you share that information, please? That I'm not familiar with, other than what the leaders have talked about today through the banks, the e-fund. I'm not sure, Kim, if you could clarify that any more, unless Dustin, Jeff, what she might be referring to. And if not, Kim, that's fine too.
I'll step in. I think she's probably referring to what's called Kiva, and that is an online program. We do not work with that. I do know that one of the other CDFIs in our area up here, WIBIC, which is the Wisconsin Women's Business Initiative Corporation, they do work with Kiva loans. And I know that the SBDC in Stevens Point, Patrick, he can also help you with that. He's helped a number of businesses put a Kiva program together. So that would be the information I have.
Great, Jeff, thank you. And Kim, yes, as Jeff mentioned, that is Kiva. So with that, Dustin, Jeff, in addition to John sharing any changes that might be coming up this year, anything that you're either aware of on your banking finance side?
Well, I can do the white elephant in the room before everyone asks is what's going to happen with interest rates. And the magic answer is we still don't know. Last year with we started the year off with the anticipation that we would see, I believe it was 6 rate changes, and we ended up with 3, one larger one. And the short end right now that we're hearing is maybe 2 or 3 throughout the year. So it's just really hard to say right now with the current changes and John saying the tax law changes. There's a lot of hesitancy I see in the market. However, I'm also noticing, just from a perspective and talking to clients and stuff, cash is starting to dry up. So more people are not having the cash reserves to be able to go. So lending is becoming a more prevalent question again around looking at future expansions and expenditures and capital expenses. So, but that would be the one thing. Here's what I always say when it comes to interest rate: the banks are always going to be in the market. So, right, like banks are done off of margins of whatever the Fed is running at. And unfortunately, in my opinion, I think with the low rates we had for such a long time, we got accustomed to those. But if we look historically throughout our economy, that's not normal as to what we had. And where we're at sitting right now and a little above has been more the norm of our economy and where things have functioned. So some people are coming around to the current rates, even though they're higher than the recent history. And, I say that's the banker's job too, though, is to look at that and make sure it's a feasible expense for your business and to help you succeed utilizing the loan and not having it as a crutch in a sense.
Great, Dustin,
I
thank you.
guess to kind of tie this all in together, you had mentioned, Kathy, the idle loans and the whole lending process and business plans. Certainly the time to borrow money or at least get things in line is when you're doing well and starting out. So you've got that money in place, because Dustin's not going to loan you money when you're in the hole and trying to dig out of it. At least get a line of credit in place in case of emergencies.
Thank
Yeah, that's
you
a good
for that
point.
ad, John. That is a huge thing. I try to stay away from it, but because it's the old cliche, the bank is not going to lend you money when you need it. And that doesn't sound right, but in the small business world, that's the case. When you are doing well and moving and planning for the future is the time to come in and get a line of credit. I think sometimes loans in the banking, what I find when I talk to small businesses that are starting, is they think lending on the business side similar to consumer, where, hey, I'm going to borrow against my house. I'm going to take a home equity line, or, I need cash. I'm just going to refinance my house. That's not typically how lending works in the business world. You don't buy a commercial property and then build up equity and say, oh, well, we need some cash, so I'm going to refinance our whole building. It doesn't work the same way. That's not how the bank likes to look at it. We like to finance for the expenditure and then move on. It's not to sit and make money on collateral, over and over and over. It's to help the business grow and expand. And that's such a good point, is we're more likely to lend when you're doing really good, and we'll give you a nice line of credit. And then it's there for the rainy days, or if something happens, or you have a tough winter, that you can draw on that line, pull some out, use that for just being able to get through the winter or whatever it may be. And then, summer picks up, you have your things, and the goal is then to pay it off, not just pay the interest, but to pay that off as soon as possible, get back in the positive and start to rebuild those cash reserves. So the good accountant is super important, and the banker is just there to help turn those numbers into feasible expansion.
Dustin, thank you. And I recall a wise person once said, sometimes it's better to look into starting a business, but sometimes it's better to, when you do so, to find out that maybe you shouldn't start that business, because we'd rather have you succeed in your business and find out 2 or 3 years later that perhaps that may not have been a good decision. So it's hard news to hear, but we think it's the right news to share. We have another question from Kim. Is having debt better as a write-off than letting someone come in with more capital and lowering the debt?
I mean, that's kind of a dicey question. Obviously, you want to minimize your debt, because that's a fixed cost that you have. And so regardless of what your business is doing, you're always going to have to make that monthly loan payment. And so, to keep your debt as low as possible is recommended to do. Certainly on the flip side of that, yes, you want to have some credit history. So when you do need to go in for a loan, you've got that history out there, and will help in the lending decision.
Great, John, thank you. Jeff, anything additional to add to what Dustin had shared?
I would just add one thing. I'm presuming that most of the business people that are on the line with us are small business people here. He brought up the interest rate thing, and what I would say is, as a small business owner, you really shouldn't be getting hung up too much on what the rate is. What's important to a small business owner is cash flow. And so Cash flow is what's going to pay that loan back. A lot of times, small businesses will focus a little too much on what the rate is, and really a differential of a point on rate, if you're comfortable with that banker, in that monthly cash flow payment is minimal. Really what you want to do with your business to grow your business is work with a bank that you're comfortable working with, and really interest rate should be a secondary type of decision-making process.
Great, Jeff, thank you. And we have a question from Robin. As a new business, how can I best prepare for tax season 2025?
Well,
John,
probably,
back to you.
yep, probably a question that should have been asked a year ago, but what your accountant is going to want to see, or what you're going to need to prepare the taxes, is a summary of your income and expenses for the year. Depending upon your record keeping system and so forth, that may or may not be something easy to do. If you have one checking account for your personal and one for your business, that's going to require a lot of work to go through and split out one from the other. Typically, what we recommend is, regardless of how you're set up, it's best to keep a separate banking account for your business, and run all your business expenses through there. And certainly, if you have the ability to get a business credit card, do that as well. Again, to keep your business separate from your personal.
Hey, John, thank you. And I think with that, we'll buy back a few minutes here. And I just want to thank everyone for joining us today, and especially our panel to Jeff, Dustin, and John. Thank you very much. And should you have any additional questions about business finance or taxes or any other topics related to business, please feel free to contact me. Our consulting services for Vilas County businesses are free of charge. And enjoy your day.